Hey guys, good afternoon. In Tuesday's AMC Q4 2024 Earnings Press release, we had some amazing good news, and I have it highlighted on the screen here, that the net cash provided from operating activities was a positive $203.6 million. And I know everybody's running with that headline. However, in accounting, there are always two sides to every story. And in order for you to have the proper expectations and understanding about this number and what it is going to mean to you and to AMC in Q1, I just want to spend a couple minutes with you guys explaining why this number was so high and how it's going to affect Q1. If you got a couple minutes, let's get right into it. It was nice to see that bullet line. Even I got excited about that. It's nice to look at the balance sheet and see that cash and cash equivalents went up $105 million. However, is that really evidence that AMC is leveraging operating efficiency? Not really quite so much. And to understand that, we need to understand the cash flow statement. I'm not going to give you an accounting course. I'm not even a CPA, but I can show you on the cash flow statement why these numbers ended up being the way they are, and show you the CFO's comments and the comments in the 10Q to help you get a full understanding of what happened in Q4, how we got this good result, and how it is going to translate into expectations for Q1. Here's what I want to convey to you about AMC's business and how cash flows in and out of the business. And they cover it in the 10K on page 56 and 57. If you think of a really strong week in the movie industry, the company is bringing in a lot of revenue that week. However, they don't pay the studios the fees, which is about 50% of that box office revenue. They don't pay those fees for, what do they say here, 20 to 45 days following the admissions revenue coming into the company. That becomes a lot of cash coming into a company like AMC, and not having to pay the bill to the studios for 20 to 45 days later becomes a big deal. Meaningful amounts of money coming in when you have a super strong end to the year like the industry did in those last several weeks of 2024. Just look at these last several weeks of Q4, this enormous weekly box office, 307 million, 311 million, 338 million, 405 million per week. AMC got a portion of all of this box office, and that is a tremendous amount of cash flowing onto the balance sheet. And in the 10K on page 57, this section called cash flows from operating activities, AMC explains this to us in a little bit more detail about why the cash flows received from operating activities went up, because, as I highlighted, the cash used for working capital to pay those studios declined while attendance increased 20% in the fourth quarter of 2024. Unfortunately, those bills still have to be paid. And if you understand accounting, or you listened really closely to what Sean Goodman said in the earnings call, he did touch on this. If we scroll down in the call transcript and remember exactly what he said, his exact words were, "This will largely reverse in the first quarter of 2025 when those bills have to be paid." To be more detailed, let's read the entire sentence of what he said, which was, during the fourth quarter, AMC benefited from strong cash generated from working capital that we expect will largely reverse in the first quarter of 2025 when many payments related to the successful fourth quarter are made. If you want to get all nerdy and sit down with your CPA and understand exactly what we're talking about here, just a couple things to point out to you to go look at on the balance sheet would be the increase from Q3 to Q4 in accounts payable. Accounts payable on the balance sheet went up from $247 to $378 million, about $130 million increase. If we look at accrued expenses plus other current liabilities, That's 230 plus 108, $338 million, about a $20 million increase over accrued expenses in Q3. And if we look at current unearned revenue, an increase in Q3 from $385 million to $432 million, an increase in that liability account of about $47 million. Those accounts are what Sean Goodman is talking about when he's saying the company benefited from strong cash generated from working capital. The company received the benefit of the revenue from box office admissions. That benefit, that income, that cash is what drove up the cash that we see here on the balance sheet. But the bills are going to have to be paid, and they're going to be paid in Q1. All of those increases that we just went over on those liability accounts will experience a cash outflow in Q1. What does that mean as far as expectations for Q1? Well, if we look at previous Q1s, you can see there is a much larger cash outflow from operating activities in Q1 for similar reasons that we are going to experience between this Q4 and this Q1. I think you should expect that there's going to be a large cash outflow from operating activities, cash used in operating activities in Q1 coming up. And, fortunately, the company did raise cash in Q4 in December, and that cash will be hitting in Q1 also. This is the same thing I've been talking to you guys about now for a month or two. The reason they did that cash raise in December is because there's going to be a cash outflow in Q1. Sean Goodman and his team are not dummies, and they're very good at forecasting, and they knew that between Q4 and Q1, there was going to be an outflow of cash, and that is how I was able to forecast in November that there would be a dilution event by looking at the box office for Q4 and Q1 and doing my own internal forecast of cash burn. They can do that, but much better than me, of course. And I think what we will end up seeing is when we add up Q4 and Q1, the cash provided by operating activities and the cash used by operating activities, combine those two quarters, it's going to come very close to matching the cash that the company raised. That cash will hit the books in Q1. We'll have an outflow in Q1. And hopefully, if we're lucky, we end up right back around $527 million like we ended the quarter on Q3. To wrap up everything that we just went through, we had a great cash provided by operating activities in Q4, but that piper is going to come due in Q1, and we already know Q1 is a low box office quarter, so you should expect to see a pretty hefty cash used in operating activities in Q1, and some of that is going to be because of Q4. The cash brought in has bills that are due, and those bills are going to be paid in Q1. Nothing that happened on these books here, none of this press release is any sign of illegal activity or financial engineering. This is generally accepted accounting principles, GAAP. It is mandated that companies use accrual accounting, and what we're just seeing here is accrual accounting in real life. We're seeing it happening, and it will catch up in Q1. So there's going to be a lot of people telling you this was fantastic and everything's changed with Q4. I'd say, wait 3 months and look at the Q1 cash flow, and then we will get the rest of the story. If you have any questions or comments, drop them for me down below. I'm Tony Denaro. Thank you for watching, and I will see you on the next video.